Hey everybody, so this is class 2 of the ICT 2022 remix, Trader Mike edition, right? So we're going to be going over a few different trades from last week. That's how I'm going to do this. I plan to do, one of these videos in this series a week, and it's basically going to be going over past week's price action, past week's setups, and we're going to break it down. We're going to talk about everything that played out that me and my mentees were talking about, last week, the setups that we saw, etc. So we're going to start here so we had a setup here on Tuesday on ES, and I'm going to talk about this one, okay? There was a couple different setups last week, but I want to start here. So here's the deal, guys. Let me actually rewind a little bit more here. Okie dokie. So here's the deal. When we were on Tuesday, what I want to do first here is I want to go to the daily chart, because this is going to tell us what price really wants to do here. The higher time frame tells you the true story. The real story is what the higher time frame will tell you that. So what are we looking at here? What has recently occurred on ES? Okay, it has had a stop run right here. Look at this push lower. We recently had a run on these daily sell stops right here. You see that? So we have our lowest low in the middle where my cursor is. So we have a higher low on the right. We have a higher low on the left. That makes that a swing low level. That is a higher time frame level. So we understand beneath swing low levels, aka support, is going to be sell stops. And what we saw recently was price came down and it swept those sell stops right there. It swept it. Okay. So those sell stops have been taken. And what's key here is what happened immediately after we did that. What happened immediately after we took those sell stops right there? It put in a swing low. See, we got like this big, huge, explosive ramp up immediately. Wasted very little time. Immediately after it came down, took that level, what happened? Put in a swing low. Look right here. Low, slow in the middle. Higher low on the left. Higher low on the right. See how this candle right here is higher. The absolute low of this candle is higher than this one, and the absolute low of this candle is higher than this one. That makes that a swing low. And this candle right here on Monday closes. That's a swing low. That's a confirmed swing low that's put in after taking out sell side. Okay, so this is significant because pay very close attention. Whenever you have this signature like this, whenever you have a signature like this where it's bullish market structure, you take out sell side liquidity and then you put in a swing low like this, it is such a very strong draw on liquidity. It's like a magnet for price. All right, so pay very close attention. Take note on that because it's a very important detail. So the high of Monday, it's going to serve as a magnet, a very strong draw. I've already confirmed that beforehand. Like, I've already confirmed that coming to the day. Like, this is the very first thing that I saw that caught my attention on ES. Okay, was that we had that daily draw. We had that swing low put in. We have that third candle draw from Monday. I know it's going to want to likely, very, very likely go up into that level here soon. I already know that right away. Okay. So after I confirm that, then I go to the lower time frame, or not really a lower time frame, but a lower than the daily chart. And what we see happening here, there's that high that I just marked off for you. That was Monday's highs. That's previous day's highs. That is a magnet for price. That's a strong draw. And I understand that it's going to likely want to come up and take that level here soon. I've already done the work on a lot of the work on the higher time frame chart. I already did the work on the daily chart, and I've already confirmed that. See how I didn't just go in and look for some little 1 minute or some random 1 minute shift in market structure to the upside onto this random low and then trade every single one of those little displacements that I see. No, I'm framing this trade. I went to the higher time frame, and there's a reason. That's the key thing here. There's a reason that price should be moving higher. There's a why behind it. It's not just some random little move that you're looking for in price. No, I understand that that's going to be a draw, and I understand it's going to want to come up into that level here soon, and that frames the trade idea. Okay. Now we have some support down below. We see these old highs right here. This serves as support. And the thing about these old highs, okay, I know a lot of people that are in, kind of the SMC space don't really subscribe to basic support and resistance theory. But here's the deal. Whenever you have these old highs like this, inside of an imbalance, they are very sensitive price points. Don't take my word for it. Go study it. Very sensitive price points. Whenever you have these inside of like a fair value gap, they are very sensitive. We had that. Look right here. We have that right there. And it's best if they're in a discount, of course. That's always ideal. But even if like in these scenarios, if it's very strong, and if it's very strong, has a strong draw liquidity up above like that magnet, a lot of times you won't get that deep little pullback. because the draw on liquidity is just too strong. So I have these levels down below, and I'm watching each and every one of these levels right here, because they're levels of support. See this? And they're inside of this imbalance. So those are very sensitive price points that we see right there. Okay. So we're pulling back, and we're pulling back without taking that level. It's pulling back here, guys. It did not take that out. And it's doing this all the way up into New York session. So it did, like, has that draw intact. And now we're coming to New York session. The volume is going to start picking up come 9:30 equity bell. It's going to get very interesting. So what do you think you're going to look for at that point? You're going to look for a shift, and then you're going to look for that draw to be taken. You want to see that change in trend, and then you want to see it aggressively draw to that, what's serving as a magnet for price. Okay. But now we're coming down to higher time frame support here. Okay. So here's the deal. Let's fast forward a little bit, because as you can see, we're coming to 9:30 equity bell now. What does it do first? It immediately sells off. Okay. And that's a common signature that you'll see at 9:30 equity bell. A common signature that you'll see at 9:30 equity bell is eternal soup right off the bat. So price will move in the opposing direction of where price really intends on going. What this does, yes, it takes sell side, but also it baits in opposing market participants, aka shorts, to then take out their stops to the upside. So it kills two birds with one stone. And that's what we see at 9:30 equity bell a lot of times. Not all the time, but a lot of times you will. Okay. And remember, this level of support ain't going nowhere. So assume all the way out. See right here, we have this level of support that it's also doing this at 9:30 equity bell. We also have a draw on liquidity up above right here as well. So it frames it. And then what happens next? It starts to respect that level. It starts to push up off that level. And what do you notice here, guys? What do you notice that's occurring right here, right now? I'm sure, plenty of you have already seen, or you already noted it, right? And yes, it is a classic signature. ICT said the 15-minute swing low, right? Well, guess what? Look what you got right there. See that? Lowest low in the middle, where my cursor is, higher low on the left, higher low on the right. That is a 15-minute swing low. Look at that, guys. We took it. We took it right there. And it's also off that higher time frame support. So it's not like some just random swing low. Like there's something framing this. We have the draw on liquidity. Like we've already done the work on the higher time frame chart. We already understand like the higher time frame trend, the market structure. We understand where the higher time frame draw on liquidity is, which is right here being previous day's highs. We understand we got higher time frame support right here, being that old high and the imbalance. And we understand we're implementing time, and we understand 9:30 is a key time where you're going to be seeing Turtle Soup's fake runs. And we get that fake run. It takes out 15-minute sell side right here. Okay. Now what I'm looking for next, if it's taking out that liquidity, what's the classic ICT entry signal that you look for? You look for a lower time frame shift in market structure. What does that look like? Well, you want to see the fair value gap. And also it's ideal if you get the candle close above the short-term high as well. Okay. So look right here. This is that. Look right here, guys. High side in the middle, lower high on the left, lower high on the right. That's a swing high. That's a short-term high right there. See that? And then look right here. Price comes up, and it gives a close above that level right there. It gives the fair value gap confirmation in here as well. See that? Oops, right there. So there we go. Again, that's after taking that liquidity. That's after testing higher time frame support. We got to draw liquidity up above right there. And now we're seeing this, this shift in market structure right here take place. Okay. So what do you look for next? Well, you look for a discount. All right. Now what I'll do a lot of times, again, this isn't the ICT 2022. As he teaches, wait for the discount marketplace within the displacement range. But as I tell my mentees, whenever we're talking about these setups in our live streams, is if you like the risk reward and it comes down to, say it comes down and draws down to the imbalance, and you like the risk reward, but it's not quite a discount marketplace, I don't see anything wrong with taking the trade if it doesn't give you a discount, even if it doesn't give you a discount marketplace. Like, for example, if you want to target, be super aggressive and target this high up here, which would actually be, even though that's the draw, and I understand that's a very strong draw, it's too aggressive for me personally. If you like the risk reward, you like the play, then by all means go for it. But that's the thing though. Like, if you want to wait for the discount though, if you absolutely want to wait for below 50% equilibrium, there's nothing wrong with that either, being picky with it. Because there was a couple there was another setup this week, which we'll go into here in a moment, that didn't quite give a discount. But I still consider it ICT 2022, even though it didn't give a discount marketplace on the interest signal. It's still considered ICT 2022 because they had all the signatures, just didn't give the discount, but the risk reward was still amazing, phenomenal. And you'll get plays like that. And that's kind of up to you, what you want to do at that point. It's kind of your call. Okay. Do you want to wait for the discount? Do you want to just get in the fair value gap? It's kind of your, what you want to do with it. But this actually did give a discount though. And what it ended up doing next is it pulled back below 50% equilibrium. It pulled back below 50% equilibrium of this price range, but it was just barely. If I recall, it was like right on the, right on the penny that it did that. So let's see. See that? Like literally right on the penny on ES. It pulls back into a discount within that range. So it is debatable whether you got filled or not. But as I was talking about on mic with my mentees on this particular day, as I remember, as I said, like you could draw your Fibonacci from this low as well to that high, because you could keep your stop here. See this? You could keep your stop beneath this low as well, because it's the last fair value gap. There's no other fair value gap in here on the 5-minute chart. And if it takes out that low, guess what? It's probably going to take out this low too. Okay, so you could do it like that as well, and I made that very clear. So if you want to keep your stop beneath that level, it moved in a little bit deeper. And then you can see you got your in both scenarios though, you got your 50%, you got your discount marketplace. It traded below 50% equilibrium. It rebalanced up price action, and that's what we saw play out right there. Okay, now as I was talking about on mic on this particular day, I said if I was play this, because I'll trade Forex. I'm talking about futures, but I personally trade Forex. I use the model in Forex, but I'm doing futures just for the specific series. But price is the same signature. So what I was saying was, if I was to be trading this, how would I go about doing it in regards to where I would be taking my profits at? I would be conservative with it, and I would be taking profits right here. That's just me though. But here's the deal. Like you could shoot for previous day's highs if you wanted to, since it's that, as I've already made very clear, it's that draw on liquidity. It's that higher time frame draw on liquidity. It's that third candle draw. Okay. So you got to hold it a little bit longer, but it's a phenomenal risk reward though if you did take it. And it is valid, because remember what I said, whenever you have that third candle, when you have that swing low put in on the daily chart and it's bullish market structure, takes liquidity like that, that is an extremely powerful draw. Extremely, I can't stress how strong of a draw on liquidity that is. And I knew that coming to the day. I knew that was a very strong draw on liquidity. I made that very, very clear. So understand that it's going to want to, it's like a magnet for price. It's going to want to come up and take that level here very likely, very soon. So we have that draw on liquidity. But this is kind of what I consider like right here, since that is a level of resistance, some short-term resistance being that short-term high. All right. That's what I consider kind of a low-hanging objective profit target, I guess you could say. That's how I would personally go about it, because I like those type of deals. Like I like the low-hanging objective type of deals. That's just what fits me, myself personally. But what fits me doesn't fit another person. Another person, they like those, those bigger plays that produce much bigger winners than losses. That's what fits a lot of people. But then that's what fits me. It's just a low hanging objective. And also another thing, you could have took profits right here. That's another low hanging objective. It's just literally the high of the impulse move is a valid profit target. If you get in at a discount, that is, like if you get in at a discount marketplace and you shoot for this high right here, that's just a classic 1-to-1. There's nothing wrong with the 1-to-1. Sideways from what a lot of people say, a lot of people that have no idea what they're talking about. There is nothing wrong with a 1-to-1 risk reward ratio. You can clean up, you can get rich with a 1-to-1 risk reward ratio. Nothing wrong with that at all. Or you could have just, as some people do, you could scale out. You could take a partial right here, take a partial right here, and then just slowly scale out all the way up into this higher time frame point of interest right here. It's up to you. Like I'm not here to force you into a mode. I'm not here to tell you, do it like this. This is the only way. Nah, you got to figure out what style fits you, what, how you want to do it, because what fits one trader is not going to fit another trader. Okay. Because we all got different ways, different things that fit us, right? So, but that's the deal, guys. And you could have shot for any of it. You could have shot for this, or you could have shot for this and got phenomenal risk reward on the play. All of it was valid. You could have done so, and you can see it ended up, pushing up, and it ended up expanding all the way up to take out that strong draw on liquidity that we had been talking about. All right, so let's think about this. Let's say, let me go pull up my Fibonacci back on here real quick. Let's say you use this low, right? And let's say you got in at a discount marketplace, right? Let's say that's how you did it. Let's say you got in at 50% equilibrium, right at a discount as according to the rules. Let's say you risk the low of the fair value gap, right? And let's say, now of course it's going to be, you're going to get a 1-to-1 on that, low hanging objective. And then this one right here is about 1.20 in that area. If you shot for that high, nothing wrong with that, as I was saying, nothing wrong with that at all. Or if you wanted the big risk reward, look what it provides you with. And that's not like it's completely valid. It is completely valid because you have that draw. As I've already stated, I've already taught you why that was a draw in liquidity, why that's serving as like a magnet for price. And it's overall the higher time frame is bullish market structure. So it's available to you, and that's that's almost 4-to-1 risk reward on that play, 3.66. It doesn't take a very high win rate with a 3.66, a consistent 3-to-1 or 4-to-1 risk reward, to clean up. You can be right less than half the time and clean up. But if you have all these things aligned, like think about it, if you have all these things aligned being the higher time frame draw, right? You have the liquidity taken, you're implementing time, you have all the stuff that I've taught you, right? And that ICT has taught you. Like you think you can be right 50% of the time? If you really utilize everything, you think you can be right 50% of the time? Absolutely. And then look what you can do. Look at what is available to you. And it repeats week in, week out. Like you'll get at least, 1, 2, super clean setups like this a week. You just got to be patient for it. And there's another setup, which we'll be going to here in a moment, which gave a similar scenario. Even if you didn't, here's the deal. Even if you didn't wait on a discount, because again, that's like, say you just did this, for example, right? Let's say you got in at the imbalance. Still, you might decide that that's good risk reward for you, but that's still valid. 2.6, you could still be right less than half the time and be profitable. 2.65, that's just getting in right at the imbalance. Okay, that's not even waiting for the discount. You got in right at the imbalance, and then you're anticipating that's going to serve as support. You kept your low, or you keep your stop beneath the low of that fair value gap. That's almost 3-to-1 risk reward on that play. Still, even if you didn't wait on the discount. So it's really up to you and how you want to do it. All right, add your own twist to it, right? Whatever fits you. That's how you do it. So that's what we saw on ES on Tuesday. Now, there was another good setup on NASDAQ that we're going to go over. And it's not all good setups. Actually, on Friday, we're going to talk about one that was actually a losing trade setup that I had identified, because I don't want to, act like it's all perfect, that it's all winners. And we're going to go over a losing trade setup as well, because you need to prepare for those instances, because not every single trade is going to be a winning trade setup. You're going to have losses. That's just a part of the game. That's a part of trading. But we're going to go over NASDAQ next, because this is the best trade setup of the week. No doubt about it. This was the best trade setup of the week, and it just jumped off the chart at us. It was just a no-brainer. So we're going to pull up that next. All right, so this trade setup was on Wednesday, and it's on NASDAQ, okay? So what's the deal here? It's kind of a similar deal as what we were talking about with ES just a moment ago. The market structure is bullish on the daily chart for NASDAQ, okay? It recently got that run of these stops right here. It's starting to curl up, so it's in an upswing at the moment. It's got that, essentially that daily momentum to the upside, and it's ultimately drawn to this high up here. So what you see here is we got this swing low put in, higher low on the left, higher low on the right. That closes, so it's in this upswing at the moment. So the daily chart is strong at the moment, or it's in upswing right now, and that daily momentum essentially is to the upside, right? What's the 4-hour market structure tell us right here? Well, the 4-hour market structure is bullish as well. It's consistently putting in higher lows. It's consistently making new highs. Okay, so it's just consistently ramping up. Now I had something very interesting. Again, right off the bat, I identified this. Literally, right off the bat, I had identified this morning. Okay, and it's this. What is that? What's that right there? That's a swing low level on the 4-hour chart, while operating within a bullish market structure. That is a higher time frame sell side liquidity pool. Look at this: low low in the middle, higher low on the left, higher low on the right. That makes that a swing low on the 4-hour chart, aka a higher time frame level of support while operating, may I remind you, within a bullish market structure, not only on the daily but on the 4-hour chart as well. Right away, I have that point of interest noted. We were all very aware of that point of interest in the chat. We had our eyes on it. That was our main focus point. And as I said several times, today is probably going to be a very interesting day. And I knew likely we were probably going to get a clean setup for this model today, because it was just setting up to do it. So I understood that we have that liquidity pool right there. We also got the third candle draw right here as well. So after it takes that liquidity, this is going to be like that magnet. Remember what we were saying? It's very similar to the previous example that I was just saying on ES. It's very similar to that. I had that magnet for price up there. Bullish market structure, third candle draw, but now it takes out this liquidity. Where's the next draw going to be? If it takes out this liquidity right here, being that higher time frame sell side, it sweeps the stops because there's a big bucket of stops that are going to be resting beneath this level. Why? Because it's support. Where else are you going to keep your stop at? You're going to keep your stop underneath the support. That's the next clear established level of support. This is the absolute low. This is the absolute low that price hit before it ramped up and made that high right there. There's going to be a big bucket of sell stops right there. You can anticipate that. And then after it takes those sell stops, the market structure is still bullish. If it has that stop run, the market structure is still bullish. Nothing has changed. And what's the next draw going to be? If it takes out those stops and it's a simple stop run, which is what we're anticipating, a simple stop run, where's the next draw going to be? It's going to be that high right there. Because now it's taking those stops. All right, we have willing sellers right here. That's what we want to see. And then after that is achieved, we have that objective hit, then this is going to be the next draw. That's going to be that magnet for price, okay? So, so what do we see here? Again, there's that low. Now we're on a 15-minute chart. There's that low right there, that higher time frame level right there. So that's what happened first things first. It kind of had a little move lower right here in right after midnight. And then it had a big ramp up. It has a big ramp up, and it does take previous day's highs right here, which is a key buy side liquidity pool. Previous day's highs is a big liquidity pool, as we've already talked about. It's taking out that high right there. So it takes out that liquidity. What's it want to do next? It wants to seek opposing sell side. Where's the next opposing sell side liquidity pool? The next major key liquidity pool is going to be right here. Why? Because it's low of day. What else do you got in there? Like literally, what else do you got in there? Like in regards to a significant sell side liquidity pool on this ramp up that you see my cursor moving, what else do you got in there? Really nothing. There's really nothing in there. Okay. And that's why we didn't trust this push up right here. See how we got this push up right here? See how it kind of looks pretty strong? It looks like a potential shift, but this is why we don't trust it. I know you see the fair value gap and all this stuff, but a key part, this is a keynote moment as well. When you're looking for your shift in market structure, your high probability shifts in market structure, you want to see it take a big liquidity pool, a key liquidity pool. And this is like where you get a lot of fake runs, a lot of stop runs. And this is how you can anticipate those stop runs. It's whenever you see a big push up like this, but it's not taking out any significant sell side liquidity, a lot of times that's going to be a fake run, because all this is doing right here, when you see it push up like this, you see this big ramp up, it's just creating liquidity beneath this low. Because remember, and now we actually have relative equal lows down below as well. It found the support, it's ramping up, it's enticing traders to get in long because they see this big ramp up. They see that the trend is bullish. Everybody sees that the trend is very bullish. They see this big ramp up. It's going to entice them to get in. And where are they going to be keeping their stops at? Beneath support. Support right here, right here. That's where their stops are going to be. So it creates that liquidity right before it takes it. See that? That's that manipulation move higher. And look what happens right here, guys. What did I just say a moment ago about 9:30? What is 9:30 a key time for? What did I just say just literally on the last example? What did I just say about that? 9:30 is a prime time where you will see turtle soups, fake runs. That's a time where you'll see price a lot of times move in the opposing direction of where it really wants to go. Okay? And we see right here at 9:30, what does it do, guys? It pushes up immediately. It pushes up. It takes out these buys out over here, rebalances that price action. And what do you think it's doing here? It's enticing, as I just said a moment ago, it's enticing longs to get in this thing. It's enticing them to get in because they want to see this ramp up to take this high. It's looking very bullish. It's looking very strong. And it creates liquidity beneath this low. It has that push up at 9:30, and that's the intention. That is the reasoning for it. Okay? But again, we don't really trust this push up as a real shift in market structure because it's not taking significant sell side liquidity. Okay? It's just not. It's not taking out significant sell side liquidity. And we've already taken out, may I remind you, on this push up in a London session, we took out previous day's highs liquidity already. That liquidity has been purged. It's been taken. It's gone. It's done with. It's already taken that out, and now it's selling off. And what do you think it wants to do? It wants to sell off and seek major opposing sell side liquidity, and we haven't achieved that yet on this pullback yet. It's not taking out any major sell side liquidity on this pullback right here. But then it pushes up right at 9:30, and we understand because we're implementing time that this is a key time where fake runs are going to be occurring. Right at 9:30. That's a key time, guys, that you see that, and it creates liquidity at this time. There's your low. There's that support. All right, there's a support. You want to see it take that support, okay? Because there's going to be a bunch of stops beneath support as always. So we want to see it take that right there. And does it do that? It does do that. And you could even scalp this right here. This isn't the setup that I'm talking about for today, because I was looking for longs on this today because I already framed that trade, and that's. But even right here, I mean, look at this. You understand that it's probably going to want to take that level, and then we end up getting that big flush. We got the fair value gap right here. See that? Look how it just slightly tapped into it, and it's just such a big rejection because you got that drawdown below. See that? Even that right there. Like, that's a short opportunity if you wanted it, of course. But that's not what we're talking about today. We got a much better setup at our disposal. Because as I've already framed, like, we have the higher time frame level right here. That's a point of interest that I had my eyes on. A key level support. We took out the support as well right here. So now it's completed that objective. Here's the deal. It's bullish market structure. We've already confirmed that it's bullish market structure. We're trading with the tide. If you're looking for a buy, you're trading with the tide. Okay, you're trading with the overall trend. And now we actually have taken out significant sell side liquidity. We didn't on that first push because we took out previous day's highs. We got this pullback, but now it's created liquidity right here, and it's taking it. And it's taking it right here as well. It's taking out the low of day. Low of day is a significant, and I mean a significant sell side liquidity pool. This is the absolute low, guys. This is the absolute low of that ramp up right here that took out previous day's highs. This was the absolute low of that huge rally. That's a big level. Now that it's taken that liquidity, now that it's taken out, the low right here as well, that's a higher time frame level of support. So now after we take that higher time frame level of support and we get that change in trend, okay, we get that change in trend to the upside, where's it going to draw next? And I've talked about this. I've taught this also in one of my most recent videos, which was the draw and liquidity video. I forgot the exact title, but I'm sure a lot of you have watched it. And if you haven't watched that video, I'm going to leave a link to that video in the video description. How to find the draw and liquidity is what it's called, I believe. How to find the draw and liquidity. We talk about this. If it takes out this sell side right here, it's achieved it. It's taking out that sell side, and it has a change in trend. Where's the next draw going to be? Up above. Because remember, it's bullish market structure. Okay? So what we did next was I went to a 1 minute chart. And I'm looking for that reaction now. I'm looking for that classic signature, right? Because we've already taken out the sell side. We take out higher time frame liquidity, but again, there's your 15-minute swing low right here as well. Look at that. There's your 15-minute sell side right there. Boom. Oops. That was a fail. Let me try that again. Boom, right there. So we took out that 15-minute sell side. Go to the 1 minute. Now we're looking for a reaction. Because now that we've done that and we have that liquidity that has been taken, it can now seek higher prices. Again, we get one last move lower, no problem. We're still looking for that reaction. Uh-oh. Uh-oh. Right there. Set up. Now, again, this is one of those instances where I didn't pull back into a discount, but me and my mentees, as I was talking about with them on mic on this particular day, I said I still like it for a buy setup. Even though it didn't give you a discount right here, I like it a lot for a buy setup. And I'll tell you why I liked it for a buy setup. Even though it didn't pull back into a discount, I still consider it ICT 2022 because it's like literally everything else, but just not the discount in regards to an entry. It's still it's the model in play right here. And as I said, this risk reward is amazing. Like, this is amazing risk reward. I mean, look at this, guys. And let's note the imbalance because, again, we got the shift in market structure. It took liquidity. We get a push up. Look at that close. We get a close above the short-term high. We get the fair value gap confirmation here as well. Right there. There's your fair value gap. 1, 2, 3. Leaves the imbalance. Serves as support. And then you have a bullish order block right here as well. See that last down close candle right there? That's the bullish order block that it comes down into. And now what do we do next? What do we look for next? Well, we have, where's the next major liquidity pool that's going to want to target? Since it's already taken out this, where's it want to target next? Well, we have buy side right here. And you have the buy side all the way up here, which if you're really aggressive with it and you want to shoot for that, by all means, it's overall bullish. Here's the thing, it's overall bullish market structure, so you can hold for that if you want to. Again, it's way more aggressive than like my style, but it's available to you because, let me just zoom back out so we're on the same page here. It's overall bullish market structure on the higher time frame chart here. And the 1 hour chart as well, even the 1 hour chart, guys, like this is bullish market structure. There's no shift in here. That's literally a stop on this low right here. There's no shift. It's no bearish market structure. You can literally shoot for that high right there if you want to. It's bullish. You're not fighting the trend or anything. Like literally, you can shoot for that high because, and that's the beauty of trading with the trend. That's the beauty of trading with the trend. And whenever you get like a significant stop run like this, and you have the market structure backing you, the risk rewards that you can get if you're patient for it is phenomenal, out of this world. And you're not forcing it either. It's not like you're forcing it either. It's just available to you. All right. It's just available to you based on the, on the play. Like you can literally shoot for that, and there's nothing wrong with that. Okay. So that's why I said, like, even though it didn't pull back into a discount here, I consider that a valid play. Like literally, I consider it valid because look what you got available to you. Now, you wouldn't be able to shoot. I wouldn't shoot for the low hanging objective being the high of the impulse move. That's another way. That's another profit target with this model is like the high of the impulse move higher. So you can see like this was the absolute high right here of this impulse move where you see my cursor moving. So if you get in like right at the imbalance and it's not below 50% equilibrium in a discount marketplace, well then it wouldn't really make sense to take profits at that high because the risk reward just isn't that great on it. So that's not how I would do it though in that case. But as I said, these are valid profit targets. So if you have these valid profit targets up here and you like those objectives and it fits your plan, well then, even though it didn't give a discount, it's phenomenal risk reward, as I said. So put on like right here. Let's just say you got in as soon as it came down to that bullish imbalance, which as I said on mic with my mentees is a valid place to get in right here. We were talking about this and I said you could keep your stop right here and you could shoot for this high right here. That's a valid PT. Look at that. Over 3-to-1 risk reward on that play. Over 3-to-1 risk reward on that play right there. It doesn't take, again, it doesn't take much. It doesn't take much with a 3-to-1 risk reward, even a 2-to-1 risk reward. You know, you can be right just with a fucking coin flip and you can get wildly rich with that. You can clean up with that with a fucking coin flip. That's over 3-to-1 on that, guys. And then again, if you wanted to shoot for this high up here, what would that be? If you really wanted to shoot for that, I'm just showing you what's the potential, okay? Because it is available to you and it's a valid profit target. Look at that. That's over 5-to-1 risk reward. That's what's available to you, and it is valid. You could literally do that because it's bullish. You're not fighting the trend. You're utilizing time. You're taking out a higher time frame sell side. So now it's taking out this higher time frame sell side right here, and it's bullish market structure. It has no reason to move lower now. It's bullish. Remember, it's bullish market structure. It's taking out higher time frame sell side liquidity. Why the fuck would it move lower? It doesn't need to move lower. It's going to want to take that high right there. See that? That's your next draw. That's your next level of liquidity that it's going to be drawn to. You understand that because you've done the work on the higher time frame. And again, this goes back to what I'm really trying to drive home with this series is it's not just taking some random low, some random high, looking for a displacement. No, you need to frame the trade. You need to look at the higher time frame. You need to identify the trend. You need to identify the draw. And that's how you get setups like this. That's how you get a full understanding and you have this available to you. 5-to-1. Doesn't take much with a 5-to-1 to be wildly profitable. Okay, it doesn't take much with a 3-to-1, a 2-to-1. And again, I'm just showing you those higher time. And there's nothing wrong with a 1-to-1 either. I want to make that clear too. I like 1-to-1s. All right, I like high win rate type of stuff. Okay, but I'm trying to show the potential for both sides. For the ones that like this type of stuff, like the huge winners, and the ones who like, you know, high win rate type of stuff as well. I'm showing you what's available to both of you. So that's what you got available. And we talked about this, and that was the setup right there. All right. And then what happens? There's an objective that's hit, and it hits this objective a little bit later as well. And that's the power of having a higher time frame point of interest. That's the power of trading with the trend as well. That's what's available to you. Our setup's always going to be this clean. No, there are going to be instances where, well, guess what? It's going to come down. It's going to take you out. All right. It's not always this clean. This is why I said like this was like an A plus setup. A plus setup right here. It had about everything. It jumps off the chart at you. Like literally when I saw this, there was no thinking. There's no head scratching. It's like, I see it. That's it. That's clean. That's a nice play. And if you got the patience to wait for those types of setups, you're going to get rewarded very well for that patience. But it's not always as clean. Sometimes you're going to have something that looks like this. That's going to be perfect like this. You're going to have the higher time frame level like that, the trend like that, and you're still going to get stopped out sometimes too. All right. So, and I'm about to show you an example here after this of something that was incorrect on my thesis on Friday. Okay. And there's nothing wrong with that because you're going to have L's. It's a part of being a trader. You're going to have setups where you're just going to mistime it. you're not going to be correct on it. That's part of it. You got to accept that. Okay. And I've already showed you though, like if you don't got to be correct all the time. I'll just literally just show you that. I mean, think about that. You're making 2 to 1, 3 to 1, 5 to 1. It doesn't take much. All right. So you got to think about it like that. Now we're going to go to Friday here real quick. Now at this point, you can see the chart's not clearly as clean as it was on the higher time frame. It's definitely much harder to read at this point coming to Friday. Like those other sets that we had on the higher time frame, it was super clean, super easy to read price action. But now we got a little bit of a different story here, right? Let me look at this. What do you make of that crap? It's awful price action on the higher time frame chart, but that's a part of it. So we're not going to complain about it. We're going to adapt. And really, if you get price, there's also nothing wrong with just sitting on the sidelines when you see stuff like this. That's actually probably your smartest bet. It's to literally just stay in cash and let it make up its mind first whenever you see something like this. And there's nothing wrong with that at all. Again, that's patience. That's exercising patience and waiting for clean opportunities to jump off the chart at you. Okay? But we're going to talk about Friday and what we saw here. It's overall still bullish market structure. And what I saw on Friday was, I saw price come down on Friday, come down to this imbalance right here. See this? And I saw that we came down and we completely rebalanced that price action on Friday in London. See that? And I saw that we took out significant sell side right here. We took out Asian session lows. Okay? So you can see right here was Asian session lows is right. Oh, actually, wait a second. Yep, right here. We took out Asian session lows already. We take out this low right here. See this sell side. And then what I saw after we took out, so that's significant sell side. And what you need for a solid shift in market structure is you need price to take out significant sell side. Remember what we were saying earlier? That's a key component to having a high probability shift in market structure if you want to see it take out significant sell side liquidity. So I saw it do that. And I understand also that the higher time frame chart is still bullish, and I have this buy set up here serving as a draw. I identified that draw already on the higher time frame. I understand that we essentially got relative equal highs up above too with this high. Not exactly equal, but it's relative equal highs, and we have that's serving as a draw on the higher time frame chart. Because remember, it's overall bullish, even though it's kind of a messy environment on the higher time frame chart. It's still bullish market structure. So I have that higher time frame level up there serving as a draw, which is also what? It's previous day's highs. And whenever you are in that upswing and you're in a bullish market structure, price's objective day in, day out is to take out previous day's highs. That's the strongest, look, every single day, that's the objective, take out previous day's highs. Takes that out, boom, day in, day out. You have that liquidity. So I understand right away that I have that magnet up above serving as a draw. It's like a magnet for price. And then I saw first things first this morning. In London, we came down and we took out Asian session lows liquidity already. We rebalanced this price action completely, not slightly, completely rebalanced this price action. And then I saw this big push up right here coming into equity bell into that time. See this? Now, this is what I was anticipating. It's not the best. Again, this isn't something that I can say jumps off the chart to me like those other setups. Those jump off, especially that last one, it just jumps off the chart at you. It's super clean. There's no head scratching or nothing on it. This one I had to scratch my head a bit. And that usually means it's not something that you really want to partake in, but I'm still going over it because, again, I actually read it wrong on the first one at least, the first setup. And I think it's important that in this series we go over those setups as well. I'm not perfect. I mean, I've been doing this a long time. I've made a lot of money, but still, I'm still incorrect sometimes. I time it wrong sometimes. And that's what I really want to get to your heads is that doesn't mean you're a bad trader. It just means you timed it wrong. And then you know what you do? You come back in, you reassess, and you look for another entry. Okay, or you just step away and just don't mess with the price action because it's complete dog crap. That's an option for you as well. But here was the deal. Here was my thought process on this on Friday. I see it push up, and I see it leaves this fair value gap confirmation after taking significant sell side, may I remind you, after rebalancing that price action, may I remind you, and then we have this imbalance right here created on this push up. I also like to see the strong close, and that's one thing it was lacking. And I didn't really like that because again, it's always best for your shifts that you see that strong close. So you can see right here, it kind of closed like literally right on it. So it actually respected it, which is a bearish signature whenever you have that. I noticed that, but again, we got the imbalance. We got previous day's highs still serving as a draw liquidity up here. So I come to the conclusion next that once it pulls back into a discount within this range, I'm going to be looking for a buying opportunity. I come to that conclusion. That's why I'm not like anticipating that it's going to come down and have a reversal to take out these lows right here, because you might be thinking, okay, it's taking out this buy side now, significant buy side, right? Because that's what you said, significant buy side. Now it's going to attack the sell side down below. Once you get a change in trend, that's the next draw, right? Well, it's a little bit different now because Yeah, we took out significant sell side down here as well, but it's giving the signatures for a shift. It's giving the fair value gap. We have the higher time frame trend that's bullish. It has this drawn liquidity up above on the higher time frame chart. So it's a multitude of things that's contributing to me establishing that this is a bullish shift in market structure. So that's what happens. It comes down to that. Now here's what we look for next. And this is where we, the very first setup didn't play out. So let's talk about it. So we get this pullback, right? We get this pullback right here, very deep pullback into a discount within that range, within that displacement range to the upside on the 1 hour chart. We pull back here, discount marketplace. And what we see first things first is we see this pop up right here. I didn't trust that as like being the bottom because you'll see the signature a lot. Price will pull back. A lot of times that first push will be a fake push as well whenever you have a big push up like that because it wants to create liquidity. So I saw this bounce up right here. And as I was telling my mentees on mic, this is probably just creating liquidity right here. Then after we take that low, look for the shift and then look for the continuation. I don't trust this first push. Okay. And that actually did give you a premium on this range right here. I didn't see it at first glance, so I'm not going to act like I called it. But it actually did because I had my focus more on a buy setup for it because for the reasons I already stated. But this actually did give you, I think it did, if I remember correctly, gave the ICT 2022 for a short play. It actually did. See that? So it actually did give you a premium on that. So you could have went short right there because as I did say on Friday, I didn't think that this would hold up. I didn't think this would like be the bottom and it would come up and take this high. I figured it was going to take this level right here because again, it was essentially creating liquidity in a discount marketplace. So I figured we were going to take that. So it actually did give the ICT 2022 for a short play and a premium right there. So there was that too. It's technically counter trend trading, but again, it is an opportunity right there that you could have capitalized on. So there was that too. But I'm going to get to a little bit deeper into the bullish opportunity though. So you can see we came down and we took out this low right here. After we take out that low, that's where I'm looking for a lower time frame bullish shift. I'm looking for that confirmation signal, I'm looking for the fair value gap, all that good stuff, right? So we come down, boom, we take that low. And then you can see right here, it's starting to push up, and boom, we get a nice big displacement to the upside. We get our fair value gap confirmation. Let me just remove this previous one just so we can kind of clean it up a little bit better here. You look right here, we got the fair value gap. See that? We get our strong close above that short-term high right there. It's kind of covered up with the fair value gap, and then it pulls back. That was the setup I was talking about for a buy setup right there. So it pulls back in that range. And actually, I think it did give you a discount. Let me see as well. It did. See how it pulled back below 50% equilibrium of that range? It's not a super big displacement or anything, but it took liquidity. We got the fair value gap. We got the strong close. And now it pulls back into a discount. And it actually did take the low-hanging objective. So you could have actually got a few point scalps on it, a few point scalp on it. That's what I mean like when I say low-hanging objectives. If you took like the low-hanging objective deal and just like scalped the high right here and took profits into that breakout, you actually would have got a win and trade, and there's nothing wrong with that. That's what I call, taking singles, taking low-hanging objectives. That's more regards to like high win rate type of deals. You'll get those types of plays as well. That's available to you. So if you actually did that, you would have made money on the play. It actually held up just fine for you. But if you're looking for bigger risk reward type of deals, then you would have got it incorrect. And that's part of the deal. Let me make this very clear because, everybody likes to sell that, because a lot of people sell this idea that you can have like, 70%, 80% win rate with, astronomical risk reward ratio. That's not a reality of this business. What comes with higher risk reward plays is also more losses. Let me say that again, because a lot of you don't quite grasp that. What comes with higher risk reward plays is also more fucking L's. Get that through your head, because I see so much bullshit on social media about people selling this idea that you can have this huge win rate with big risk reward, and that's complete garbage. It's just marketing for them, all right, because it sells well. But what comes with this is also you're going to have more L's. But I just showed you with those previous examples that you can be right less than half the time and still knock it out the park, be wildly profitable, get rich with those risk reward ratios. But you got to accept that there's going to be L's. There's going to be times like this where you're going to get it wrong. You're going to time it wrong. That's just part of it. That's going to happen. If you want higher win rate stuff like, well, guess what? That's why you go with the low-hanging objective. That's what I really like. I like those low-hanging objective type of deals. That's the reason why I do that. But you can't have it both. You got to pick, you got to choose, you got to find out what works best for you. Because if you shot for the low-hanging objective, well, then guess what? You made money. It was a win and trade setup. But when I say it didn't play out, I'm more talking about from the mind frame of somebody who's looking for bigger wins, who's looking for like just higher objectives, right? But if you took the low-hanging objective, well, then you made money on it. But then it ended up pulling the rug right here. You can see it came down, it took the low right here, and that was, the timing was invalidated, right? So then, as I said, I'm still looking for another push up. I wouldn't sleep on it. And it ended up pushing up. Now, at this point, it is after 3 o'clock, or I mean, it's after 11 o'clock, so I can't really say it would be something that you want to mess with, really. But so you probably just have to, consider it one of those days where you took an L on the chin, which is fine. Because, I mean, remember, if you took those other plays beforehand, well, then you're still up very nicely on the week. You're literally eating. Like, you're up astronomically on the week, if just from those other plays, even if you did take an L on this. And it ends up giving a lower time frame shift a little bit later, but it's very lethargic, very weak. And it did pull back into a discount right here. It looked like it was going to take the lows there for a moment, but it pulled back into a discount once we got the change in market structure. And again, it took out the low hanging objective again right here. Look at this. We get the push up. There's bullish market structure. It pulls back. This is the low hanging objective right here where my cursor is. And it does actually come up later and takes out the low hanging objective again. And literally, if you got into a discount, you got paid again. Literally, you got paid again if you took it the low-hanging objective. But if you're looking for a higher objective, well, then it kind of chopped around into the close and didn't do anything. It didn't give that move for you. So that's what I was looking for on Friday, because I understood we had that higher time frame draw liquidity up above, and that was my mind frame on it. But overall, again, very solid week for the model. Had several different setups, really good follow through, and that's what we had. So if you enjoyed this video, leave a like, subscribe to the channel. I'll catch you later.